Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, November 27th, 2019. We again find ourselves in the final hour of the trading day. As I mention each day, in my opinion, the most valid prices of the day are the prices that are as close as you can get them to the close of the market. During the regular day, you have during the regular day, you have algorithms, you have a lot of day traders fighting it out, battling it out. I consider it a lot of noise. At the end of the day, in particular, in the last few minutes of the market before it closes, you have the large financial institutions, you have the market makers come in, they're buying or selling with size, and I would rather hitch my wagon to what they think is the valid price compared to what the day traders and the algorithms think is the most valid price. So that is why I'm primarily an end of the day trader. I wait until the end of the day, ideally just a few minutes before the market closes, to make my buying and selling decisions. So anyway, I hope everyone is doing well today. Thank you so much for coming by and spending time with me. As always, there's a lot of other things you could be doing out there today than watching this channel, but I do appreciate you being here. I hope that you are getting some kind of return on the time that you invest in here, that it's helping you become a better trader, better understanding support and resistance, good trading principles, trading psychology, that kind of stuff. So I always really do appreciate you being here. So currently, the Dow Jones is up 36 points, 0.13%. The NASDAQ is up much stronger, 47 points, up 0.55%. And the S&P is up 12 points, approximately 0.38% today. So NASDAQ and the S&P are up much stronger than the Dow. So let's take a look here. Hey Evan, good to see you, sir. Thank you so much for coming by. Always nice to see you. Appreciate you being here, and hope you're having a good day. If there's anything I can help you with today during the live stream, don't be shy. Just go ahead, put it in the channel, and I'll get to it. All right. So excuse me, I have a frog in my throat. So listen, the plan for today, as usual, first of all, we're going to go ahead and run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to talk about my current positions. We're going to go through each one. We're going to talk about when I bought them, why I bought them, what methodology or which approach I used to enter the trade, my thoughts on why I entered the trade, and then most importantly, how I'm going to manage them either to the upside or to the downside. After that, we're going to spend a few minutes on trader psychology. I know I pound this into your head each day, but I appreciate you being patient and listening to it, because in my opinion, managing your emotions, sticking to your plan is the greatest skill that you can hone as a trader. And it's going to make the difference in the long run whether or not you're a successful, profitable trader or whether or not you're a losing trader. It's important to understand the technicals, entries, exits, all that kind of stuff. 100% it's important. But in my opinion, the most important thing is to manage your emotions, be able to stick to your plan. Don't let fear or greed interfere with your plan, because you spend a lot of time and a lot of energy putting together a plan, and then people enter the plan, but they don't follow it, right? So that is a huge part of somebody's trading success. So I do like to talk about that each day. Hopefully you'll internalize it, and hopefully it will become part of you and make you a better trader. After that, we're going to go through my watch list, each stock one by one. We're going to take a look at support, resistance levels. We're going to take a look at indicators such as MACD, RSI, moving averages, ATR channels. And the way I view indicators is when I look at the screen, I look at these indicators as groups, potential groups of buyers. And so if you want a stock to go up, you definitely want to be in the company of other buyers, and the more buyers, the better. So if I look at an indicator, I look at that as one potential group of buyers. But if I have a setup where I have 2 or 3 or 4 indicators lining up all at the same time, then I look at that as 2 or 3 or 4 different groups of buyers. And if you enter a trade, you want that trade to be profitable. The more buyers, the better. And so it's just logical to think that if the more buyers, the better, the more indicators line up at the same time, the better. You know, I studied with Dr. Alexander Elder one-on-one, and he told me, he said, you know, Greg, in my opinion, I really think you need more than one indicator to take money out of this market. You need a combination or a confluence of indicators to be able to beat this market. And so that's what I look for. I look for a combination or a confluence of indicators lining up at the same time. And I've been trading for 24 years, and I can tell you without a doubt, the more indicators you have lining up, the better. So that's what we're going to look for. Now, that's step one. Step two is, even if you have a good setup, you have a lot of indicators lining up, you do have to make sure it offers you a good risk to reward based upon your support levels to the downside and resistance levels to the upside. Sometimes you can get a really nice setup, all sorts of indicators lining up, but maybe it's too high of an RSI. Maybe it's too high in the channel for you. Maybe you know, it doesn't present a good risk to reward. In that case, I just have to let it go. And sometimes those just keep moving up, and oh well, you know what I mean? I don't burn too many calories worrying about it. If I miss it, I miss it. You know, the bus always comes around every hour. You're always going to have other trades, so keep that in mind. And then step number three. First is you have to look for a confluence of indicators. Step number two is you have to look at the risk reward. And then number three, you have to be aware of what your current position allocations are. Do I have too much, do I have too many stocks in one particular area? Right? Obviously, if you have 5 positions, you don't want to have 5 tech stocks because they're going to go up, usually go up and down together. You want to be diversified. You know, you want to have maybe some tech, maybe some tobacco, maybe some, you know, who knows, pharmaceuticals, something like that, gold or silver. You want to have some diversification. You don't want too much correlation. So step one, look for a confluence of indicators. Step two, make sure you have a decent risk to reward. Step three, make sure there's not too much correlation. You don't have too much correlation in your positions, too many positions in the same type of industry. And then if you get all that, or if I get all that at the end of the day, I'm going to take the trade, put the trade on. I don't know what's going to happen, but at least I put some thought, burn some calories into making an opinion, an educated opinion on this looks like a decent trade. Do I think it's going to go up? No, I don't. But you know, I'll put the trade on, I'll win or I won't. If I lose, I'll get out quickly. If I win, I'll be patient with it and let it run. And that's the key to profitable trading. So that's what we'll do. We'll go through everything. We'll take a look. I'll see if there's anything good. And at the end of the day, if there's something good, I will take the trade. And then after the market closes, if anybody has any questions at all for me about what I discussed today, if I wasn't clear on something, if you need a little more clarification, please let me know. That's why I'm here. Any questions you have, I'm happy to answer them. And also, if you have any particular stock symbols that you would like me to take a look at, I'm happy to give you my humble opinion. And then if you do find a stock symbol that you think would be helpful for the rest of the group, or maybe interesting for the rest of the group, and you'd like me to take a look at it and comment on, please type it in the chat. Maybe put a star by it, an asterisk, something like that, a lightning bolt, I don't know, something, so I know it's time sensitive, and I'll try to get to it before the market closes. All right, sound like a plan? All right, listen, hang tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thanks a lot. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. I think we got that out of the way, right? All right. Hey JT, happy Thanksgiving to you too. Good to see you, my friend. Thank you for coming by. It's always nice to see you. Hope you have a nice Thanksgiving. Evan, SDC is strong for me today, so I'm happy. All right. SDC. Hey. Look at Evan with the 4.9% move today. What a great trade you had. You bought this back here like at 896 or something. Now it's at 10. Man, what a trade. What a beautiful trade. Bought that V1 under 30, over 30. V1 under third ATR channel, over the third ATR channel, and look at that baby go. So congratulations. Always glad to see when you guys have good trades. Hey, Steve Burns, good to see you, sir. Always an honor to have you here. I really mean that. I'm always excited to have you here. I know everyone else is, to be in the chat with Steve Byrne. It's a treat for sure. Steve says, happy Thanksgiving, Greg. Bulls have been relentless for almost 2 months. I like my Etsy, Amazon, and Beyond positions so far. I know. You're kicking butt this week for sure. You know, I watched your video newsletter last night, and you surprised me with the Beyond. I hadn't seen the Beyond. I was like, dang it. Dang, I wish I would have seen that, because I would have taken that trade as well. And, well, I'll just show everybody. Look at this. So yesterday, you know, the thing I like is we kind of have this sidewards movement. Then we go under 30, over 30, throw in a little V2 in there as well. And look at this. It finally closed above the 10-day moving average. It's been a long time. So I can't even find where it closed above the 10-day. Back here in September. So, you know, when something has been under a moving average for a long time and then finally breaks over, it's showing you that something has changed, right? And that's when you should pay attention. It's the same with Twitter. Twitter had closed under for a long time, then it finally closed over. So congratulations, my friend. Awesome trade. And look at this. Up 2.91% here. Up a little higher earlier. Fantastic, Steve. I might have to start following Beyond Meat. That's awesome. Jackson, what's going on, buddy? Good to see you. Good morning from Australia. Oh, I guess happy Thanksgiving to you. Oh, you guys don't celebrate Thanksgiving. What am I thinking? But anyway, it's the thought that counted, right? Happy Thanksgiving to all my U.S. Gosseteers. Gosseteers, that's hilarious. Good to see you, Jackson. William, greetings from Florida. Hey, William. Greetings from Utah. I imagine it's warmer down there today than it is up here. We have so much snow. It snowed overnight. I mean, there is so much snow here today. I can't even stand it. My plans for the rest of the day will be shoveling my steep driveway. So anyway, I got that going. But thank you, William Green, for coming. Really appreciate it. If you have any questions, let me know. Jackson says, laptop and coffee shop here on the beach in Australia, 7 a.m. Well, good on you for getting up early. Very good. I'm always jealous of people that are morning people, because I'm not. William, hey buddy. Speaking of good weather, hello from Hawaii. My ex-girlfriend just sent me a picture about 10 minutes ago of her and Kui. They climbed something tall. Some big mountain. Just sent me a picture. Christopher Hitchin, happy Thanksgiving, Greg. Hey, how you doing, sir? Hello to England. Thanks for tuning in. Jackson, also excuse my ignorance. Market closed tomorrow. Yes, it is closed tomorrow. And then we have half day on Friday. Dr. Jorgensen's here. Hey, buddy, good to see you. Dr. Jorgensen is my longtime friend. Went to dinner with him last weekend. He and his friend from France, they're traveling around, having a great time. Dr. Jorgensen's a world traveler. Great to see you, Bruce. Thanks for coming by. Jackson says, yes, no Thanksgiving in Australia. Right, right. 80 degrees and sunny in Florida, William says. Great. 10 degrees and rainy. All right. That sounds like us. Aman Solo, hey, how you doing? Happy Thanksgiving to you, Aman Solo. Happy Thanksgiving, Greg and Steve and friends. All right. Well, let's get to it. Take a look, see what's going on with our current positions here. All right, so Amazon, did buy Amazon back here on the 25th of November. Bought it when we closed over the 250-day moving average. This is a good back-tested approach to trading Amazon. If it closes above the 250, doesn't mean it's going to immediately go up. No, it doesn't, but it does give you a good line in the sand. If you're wrong, you can be wrong small. If you're right, you may have the potential for a nice large move. And if you do the back test on this, the long-term back test on Amazon, you will find that this approach is profitable over time. You can see this has been a fantastic trade ever since we took it. It just blasted off like a rocket ship. 2 profit targets today. I will be moving my trailing stop up to a close below the 200-day moving average here. Don't want to give this all back, obviously, right? So we've been scaling, and now we're above the 200. So that gives us a new good trailing stop with the 200-day underneath us. So going forward, we'll continue to phase out. Either until we're out of shares, or if we hit the 70 RSI to the upside, reject that, we'll get out, or a close below the 200-day moving average. That will be my new trailing stop. But fantastic trade, right? Home Depot. Did buy Home Depot back here on the 25th of November. Bought it when it went under 30 the previous day. On the day that I bought it, it went over 30, closed over 30, and in addition, we have a V1. So we have a V1, we went under 30, over 30, and that's what we were waiting for, right? Good thing we didn't get involved in any of this nonsense, and sat on our hands and waited for the correct signal. So V1, under 30, over 30, that was my signal. Has moved up nicely, did hit one profit target, hit a couple profit targets yesterday, I believe. Today hit another profit target, have another one in striking distance here. If we can get up to the 100-day moving average, be interesting to see how it will react around there. But at this point, because we've moved so far away from my entry, I will implement a trailing stop here with a close under the previous day's low. If we reject the 100-day moving average, I might take it there as well. But hasn't shown its hand yet. So we'll learn something either way. So great trade, really nice trade on Home Depot. SLV, one of my, well, I guess the only stinker we have today. I did buy SLV yesterday when we had this nice V1 entry here, higher low V1. Here's day 1, here's day 2. Day 2 washes out day 1. Definitely closed above day 1 and closed above the 10-day. But did not work out. My stop is a close below the halfway of the washout bar. Yesterday was the washout bar. That is at 1586. Right now we're at 1585. So it is kind of holding at the moment. It's holding where I thought it would hold, which would be halfway to this washout bar, 50% retracement. So if it closes under 1586, I'm going to have to go ahead, just take that loss. But if it closes over, I will hold it. So we shall see. All right. I know everybody gets really excited for my SPY trade and the explanation that they've heard 1,900 times. Right. So I apologize, but if we have some new viewers, I do want to, explain to them why I make this trade each day. So I do buy the SPY each day. At the end of the day, right at the close, I sell it first thing the very next morning. Has nothing to do with technical analysis, has nothing to do with support, resistance. It has to do with a long-term backtest done by Liz Ann Saunders at Bespoke Invest on Twitter. She's the chief investment officer for Charles Schwab. But with this backtest, since 1993, you have 2 options. Option number 1, you could buy the SPY at the open each day, sell it at the close each day. Every day since 1993. Buy at the open, sell at the close. Buy at the open, sell at the close. If you'd have done this each day from 1993, you've actually returned a negative 13.9% return for all those years of work of clicking the button, right? But if you did the opposite, which is what I do, and buy the SPY at the close, sell it first thing the next morning, right? So buy at the close, sell the next morning. Buy the close, sell the next morning. If you would have used this approach like I do every day since 1993, you'd have returned a positive 634.2% return for your hard work. And I think that kind of return is definitely worth it. So here's the chart. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. So obviously, which one would you pick? Right? Over time, the buy in the afternoon, sell in the morning has definitely had a huge edge. I like this chart. It shows you, if you have a profitable trading approach with an edge, how it can play out in the long run. If you take the long view of trading, which you should, not the short view, you know, each trade's just one of the next 1,000 trades, position size properly. And if you have something that works, stick with it, right? In between, you have ups and downs, you have drawdowns. That's completely normal, completely to be expected. Doesn't mean if you start having a drawdown, your approach doesn't work anymore. But what I do like to point out here is, you know, a lot of day traders are scared to hold overnight. But if you really look at the statistics, the moves come overnight. They do not come from during the daytime. And you know, really what this backtest is telling you is that all the gains in the US stock market, in the S&P, since 1993 have not come during the day. They've come from overnight, people bidding it up overnight and people bidding up pre-market. So anyway, with that said, that is why I buy the SPY each day at the close and sell it first thing in the morning. I did buy it yesterday at 314.08. And I sold it first thing this morning at 314.67. Is that right? Yeah, 314.08, 314.67. So yeah, nice gap up overnight. Yesterday hit an all-time high using this approach. Today hit an all-time high using this approach. So very, very happy with this. I've been using it since February 26th, and it's done quite well. It's been responsible for just over 20% of my trading profits for the year. Just this one simple approach. So I will be buying this again at the end of the day and selling it first thing Friday morning, I guess. All right, Twitter. I did buy Twitter back here on the 21st of November. Bought it for several reasons. Reason number one, we went under 30 the previous day, closed over 30 on the day that I bought it. So under, over, right? That's great. But in addition to that, we had this nice V2. Here's day one, here's day two, here's day three. Day two washes out day one, day three closes above day one's close. That's another signal. MACD was positive. Definitely like that. So anyway, yes, it's been a good trade. You can see it's been straight up. Did hit another profit target today. So this has been a fantastic trade so far. I mean, from entry to the top there, 4.97%. Not quite that. That was at the high of the day. But yeah, I mean, about 1% a day approximately on this trade. Going forward, I mean, if we get a close below the previous day's low, I definitely will get out because it's moved, you know, substantially away from my entry. This blue line up here is the 50 RSI. If we today had rejected that 50 and closed back below, that would be my that would be a reason for me to take profits. So either close below the previous day's low, like if Friday closed below today's low, I would get out, or if we reject the 50 to the upside and close back below. Then lastly, not a stock position, but a put that I sold on McDonald's. When I sell puts, I'd like to identify a strike price that has technical support on 3 different time frames, not just one time frame. So here on the monthly, the $180 strike price lines up right in the middle of the 1 and the -1 ATR channel. At the midpoint, that should provide some potential support here for people who trade the monthlies. On the weeklies, the 180 has the 100-week moving average right below us. That should act as support, and then on top of that, it would be in the low 30s. So people that are trading in the weeklies, this looks like support for people trading in the weeklies with the 100 and the confluence of low 30 RSI as well. And then on the daily, this one on the daily didn't line up as well as I would have liked it to. Ideally, I would have liked it to line up at the 6 ATR channel. Right now it's like 5.5, but it's very hard to get prices to come back down this far down. I mean, obviously it happens, right? I'm not saying it doesn't, but most of the time it does not. So on the monthly, my strike price should have some support in the middle of the 1 and the -1 ATR channel. On the weekly support, the 180 strike price should have support at the 100 week moving average in the 30 RSI, or in the low 30s. And then on the daily, very, very low, close to the 6 ATR channel. So anyway, this one's working out very, very well. I've almost got 80% of the premium. So I have a limit order in, and that might take me out. That way I don't have to wait until December 13th to wait for this to run out. So I get all the premium. But I would rather take 80% of the premium now than hold on another 2 weeks for just 20% more. Hope that makes sense. William says, hope Cooey is doing great as well as Katie. Thanks, William. Appreciate that. Yeah, she sent a picture. Boy, do those little golden doodles, they change. When I had her, she was just this little squat, little chubby little puppy. And now she's long, super thin, long-legged blonde doggy. I'll tell you that. Frank, hey, bud. Good to see you. Frank says, happy Thanksgiving. I hear Beyond Meat is soon releasing poultry meat. Ah, interesting. That would not surprise me. That would totally make sense that they would have some poultry as well. Fantastic. Dr. Jorgensen, might want to buy more Amazon over the 200. Yeah, you know, it's possible. You know, Bruce, if you think that's a good idea for you, let me know. Let me know. It's always tricky when you're in the middle of the trade to add more. I mean, it's certainly possible, but you know, Bruce, you let me know your thoughts on that. Another night of good sleep due to the SPY trade. That's right. Well, you should have had 5 good nights of sleep because it's been up 5. We've had 5 gap ups in a row. Hi, DN. How you doing? Thanks for coming by today. DN says, how do you size your position for the SPY trade? DN, I always size the same, 10% of my position. So if I had a $100,000 account, I would buy 10% of that, or $10,000 worth of the SPY in the afternoon, sell $10,000 worth the next morning. So all of my positions most of the time are 10% position sizes. If they're under the 200-day, I'll take a 5% position size. But with the SPY trade, always a 10% position size. Always, and never more. And in addition to that, maximum position size for any one position, 10%, but I never have more than 60% of my account in positions at any one time. So I always keep 40% in cash. Yeah, Bruce, you text me on that. Let me know your thoughts. All right. So, oops. All right, so listen. This is the time of the day where I like to talk about trader psychology. There's some really good Twitter channels out there that spend a lot of time and energy putting out good trading words of wisdom to us, things that definitely you should read, you should internalize. And one of them is Akil Stokes. Akil Stokes is a professional trading coach and trader, and he has some really, really good sayings that he puts out here. So I would suggest that you subscribe to his channel at Akil Stokes RTM on Twitter. But he says here, many new traders believe that more wins equals more profit and make it a goal to shoot for the perfect system. The problem is that perfection does not exist in the financial market, so all they are doing is setting themselves up for failure. This is a quote from our friend Steve Burns. Steve says, the biggest roadblock for most new traders, they never stop looking for a perfect trading system and just trade a profitable trading system. So can you guys relate to this, right? Everyone's always looking for the perfect holy grail trading system. It doesn't work. I mean, it's not available. It's not out there. What you just need to do is get yourself a decent trading system that incorporates good trading principles, support resistance levels, small losses if you're wrong, be patient with your profits if you're right. That's what it takes, right? There is no perfect trading system. There is not one particular indicator that's foolproof and is the holy grail. But, if I were you and you are running into this issue, I would spend more time and energy concentrating on following your plan of your decent trading system than spending a lot of time trying to come up with the perfect trading system. And if somebody gives you a trading system, it may work great for them. It may not work great for you, right? Everyone has a different personality. And so, it's fine to take a trading system, tweak it a little bit to something that fits yourself. But like Steve Burns says here, the biggest roadblock for most new traders, they never stop looking for a perfect trading system, which doesn't exist, and just trade a profitable trading system. And a profitable trading system figures in support, resistance, risk to reward, getting out quickly if you're wrong, staying in, being patient if you're right. That is the equation for being a profitable trader. So thank you, Akil Stokes, and thanks to our friend Steve Burns for that awesome post. All right. Aman Sola says, I agree with Dr. Jorgensen on Amazon above the 200-day. Stop losses if it closed below the 200-day. Amazon's interesting here because not only did it close above the 200-day moving average, it also triggered a 550 SMA crossover, which is a good back-tested approach. So anyway, all right. Me personally, I'm just going to stick with my trade that I had, but Bruce, I will definitely take that in consideration, okay, and get that taken care of. We'll wait to see where it closes. Frank says, Aristotle says, we are what we repeatedly do. Excellence then is a habit. Ah, so true. Get yourself into good trading habits. Then it will, follow your plan every day. It becomes a habit. Then it will just be part of you. All right. Well, how are we doing on time? Oh, we're doing pretty well. All right. All right, well, let's go down the list, take a look at see if there's anything potentially for today. Here is Apple. Boy, we had that big sell-off yesterday and then right back, right? Currently, we have a lower high, right? Which it's not a big deal here, but because we have a lower high, for me to get interested in Apple, it would need to wash out this first low. Whenever you come down into the value zone, rally, and then fail and have a lower high, you need to first wash out or go below that first dip. So essentially right down in here is where I'd be looking for Apple, looking for some kind of dip into the value zone on Apple, but it's just too high here for me. Still under the 70 RSI. It went over 70, under 70. So just going to be patient, wait for a pullback into Apple. Maybe we'll get one, maybe we won't, but I hope we do. Adobe, strong, right up here against the third ATR channel. It's above the 70 RSI. It's gone parabolic. Whenever something closes above the 70 RSI, I consider that parabolic. Learned that from Stephen Burns. It's just too high here, right? Just not a good place to be initiating new positions here at this height, looking for a pullback into value. And when I say back into value, I mean underneath the 1 ATR channel and above the negative 1 ATR channel, somewhere in the value zone, at least pulling back into the value zone, looking for some sideways movement in a V1, V2. Deanne says, do I understand that at no point you hold more than 6 trades? I can hold more than 6 trades. I just can't hold more than 60% of my capital in trades, right? So I could have 12 trades at 5%, right? Or I could have 6 trades at 10%, or I could have 3 trades at 20% if I chose to. But I never do that because I don't buy more than 10%. So I can have more than 6 trades. I just can't have more than 60%. Make sense? Right? I could have 12 trades at 5%. That would still get me to the maximum of 60. Does that make sense, Deanne? Advanced Micro Devices had that big, strong move up. Finally ran out of buyers. Some sellers came in. Again, I'm waiting for a pullback into the value zone, waiting for a dip. Dr. Alexander Elder says, stocks are the only thing that people don't like to buy on sale. They want to pay full retail. I want to buy at the very minimum in value or undervalue. I don't want to buy overvalued. And he considers over the 1 ATR channel basically overvalued. All right, here is our Amazon. Of course, we bought this with the close over the 250. We've been scaling. Very impressive that we broke through the 200-day moving average, which is really good. And like I said, we also had a 550 SMA cross today, which is also a good back-tested approach. So for me personally, with my positions, I'm just going to stick with what I have. If we close back below the 200, then I will just lock in profits. DN says, okay, makes sense. Thought because you said you do 10% position size. Yeah. But if I take a position that's under the 200-day moving average, DN, I buy a 5% position size. So, right now I have 6 positions, but I don't have 60% out there. So, do it however makes you comfortable. But for me personally, no more than 60% combined of my capital throughout all of my trades. And the majority of my trades, if they're over the 200-day, are 10% position sizes. And if they're under, it's 5. Boeing coming back into the value zone. Now that it's back into the value zone, I need it to see it stop going down, seeing it moving sideways for a couple of days, showing that we have some support, then look for a V1 or a V2. Berkshire Hathaway. This is a good example of being extremely overvalued coming into the value zone. We came into the value zone. We had 1 day sidewards, 2 day sidewards. If the next day had gone down, reversed back up and had a nice V1, V2, I would have bought it. But unfortunately, we just didn't have a trigger. The setups here, above value, into value, sideways movement, has moved up, but I didn't have the trigger. The setup was there, but I didn't have the trigger. Caterpillar. Yeah, this one I missed. If you guys remember, about 4 or 5 days ago, I was going to take this trade. This is a great example of going above value, into value. Couple days of sideways movement show that we stopped going down. 1 spike down and reversal V2. So this is perfect. Above value, into value, couple days sideways movement. Spike down, reversed right back up with the V2. Here's day 1, day 2, day 3, day 2. Washes out day 1, day 3. Closed above day 1's close. I just missed this trade. I was busy with my other positions at the end of the day, and I missed it, unfortunately, because it would have been, but it's a good example. It's a good example of a nice pullback into value, sideways movement, V2 entry. Dow Jones, looks like we're making a new high today. Just too high for me to buy up here. We're under the 3rd ATR channel. We're above the 70 RSI. Generally 80-90% of the time, this is what's going to be high. Doesn't mean this has to be a high, but percentage-wise, statistically, this is where it runs out. Other thing I don't like here, I don't like this high. See how high the MACD bars are, showing a lot of momentum. Then we pull back, have some red MACD. Now we're higher and have very little MACD. This is what Dr. Alexander Elder calls double top with a bearish divergence. So this is something he would consider bearish. Doesn't mean immediately go in and short, but it's just setting the tone of the chart. The larger context is starting to look bearish, then you need some kind of trigger if you wanted to get in the trade. Walt Disney, huge move up back there a couple weeks ago on the Disney Plus. We pulled back a little bit, moving sideways. We are up a little bit higher now, but just too high. We're at the third ATR channel, over 70 RSI. I have to wait for a pullback. Etsy. So I did buy Etsy back here a few days ago, under 30, over 30, V2, MACD went positive. I got out yesterday when we rejected the 20 EMA. I didn't like that we pegged that and bounced right back below and then closed lower than halfway of the bar. But in hindsight, looks like I should have held it because it is up nice again today. Congratulations, Steve. I know we both got in the same time. I just got out a little early. So congratulations. This has been a great trade so far. Over 7%. So anyway, wish I would have stayed in, obviously, hindsight, right? But anyway, still a nice trade for me here. But now it's over the 20. So that's really good. Ford, nothing really here on Ford. It's battling with the 200-day moving average, but just too high. Facebook, big move up today. 68.38 RSI, just too high for me to buy. Unfortunately, have to wait for a pullback. Hey, Mount Doji, what's going on, buddy? Good to see you, my friend. Thanks for coming by. Five Below, nothing on Five Below. Just kind of range bound here, hanging out, not doing much. Gold miners up today. Interesting. Had that higher low V2 yesterday. I didn't take it. I decided to take silver. Unfortunately. Oh yeah. Okay. Gold miners is stronger than gold. This is regular gold. This looks more like silver. Had that V1 yesterday. Higher low V1. I didn't take it. I took silver instead because it closed into the value, which I looked at as more bullish, but nothing here. Google, good example of above the value zone, into the value zone, couple days sideways movement. This, I guess technically this was a V2 here. I just didn't, there wasn't much of a washout bar. I like to see this wash out the previous bar. Day 2 wash out the day 1 bar by at least a quarter ATR. This really didn't. And so this doesn't make a valid V2, although it is up from there. Okay. Goldman Sachs. Above the 1 ATR channel. Really nothing there for me. I need a pullback. I know I'm saying this a lot today, but it's what I need. I need a pullback into value. I just can't buy up here at these levels. Of course, Home Depot, we bought under 30, over 30 with the nice V1. That has moved up nicely, hit one profit target today. It'd be nice if we could hit that second profit target. IBB just going to the sky. I mean, we're getting close up there to the 6 ATR channel, which is very difficult to do. But anyway, have to wait for a pullback on this one as well. Intel above the 1 ATR channel finally did come into the ATR into the value zone. No V1 or V2 here to speak of, so you know, need this to come into the value zone, get some stability, have some consolidation sideways, and a V1, V2 to possibly get into this. Russell 2000's just a monster, too high, 71.89, getting up here near the 3rd ATR channel. I do want to point out, though, that we do have a massive bullish divergence here. We have a high with very strong MACD bar readings. We did dip. We got some negative MACD bar readings. Now we are higher than this previous high, but look at the MACD. It's less than half of this big one. So again, this is what Dr. Alexander Elder would call a double top with a bearish divergence. Doesn't mean, you know, I'm going to go ahead and short that, but I look at that more in the context of my other positions, because, you know, Dr. Elder would definitely consider this running out of momentum and looking bearish. Johnson & Johnson. Strong move up here. Need to pull back into the value zone. Hey Bing Hee, good to see you, sir. That's our friend from Singapore. Hope you have a good day over there. Andrea, hey, how you doing, Andrea? Hi, everyone. Thank you for coming by. Always nice to see you. Let me know if there's anything I can help you with, okay? Jesse, how you doing, sir? Jesse says, hello, all. Happy Thanksgiving Eve. Happy Thanksgiving to you, Jesse. Appreciate it. And hope you're doing well. Let me know if there's anything I can help you with, and hope you're being careful out there with your job. William says, Greg, if you have the time, thoughts on HP. Do you consider the recent move a higher low or a lower high? The previous low didn't touch the -1 ATR channel, but did not close below it. Well, let's take a look real quick. Is this what I'm looking for, William? I thought you meant Hewlett Packard. Helmish and Payne. Anyway, confirm with me on that one, would you, William? Do you consider the recent move a higher low or a lower high? It's both. This is lower high than here. This is higher low than here. We never did close under the 1 ATR channel. We closed above the 1 ATR channel, came down. Now it's a lower high. So yeah, I would technically, this is a lower high. Therefore, I would need it to wash out the previous low. This high is lower than here. I would need to wash out the previous low. It is a higher low also, but higher lows need to close under the 1 ATR channel first before I can take a higher low. Otherwise, if you have a lower high, then I need to wash out the previous low. Hope that makes sense. I know that gets tricky. All right. Coca-Cola had this nice, bounce off the bottom, kind of consolidate, and has moved up nicely since then for sure. A little bit of a cup and a handle. Here's the cup, here's the handle, and the breakout. That's positive. To actually have a valid cup and handle, at least based upon William O'Neill, is that this cup has to come up at least 3/4 of the way up to here. This only came up to about half. But anyway, nothing on Coca-Cola today. Lockheed Martin above the value zone. Need it to come back into the value zone to buy a dip. MasterCard, very, very strong. Too high up here. Getting close to the 70-hour side. Need to pull back into value. McDonald's, that's our put trade. So that one's going very, very well. Glad that happened. Altria MO has just been a freaking monster. Look at this, guys. Look at this. Yep. So, but now it's too high to buy. Need to pull back into value here. Look for a V1, V2. Merck. Need to pull back into value. Microsoft. Finding resistance here at the 3rd ATR channel. Need to pull back into value. Wish I had more for you guys today, but this is just the market here. Netflix, very, very strong here. Need to pull back into value. Same. Pull back into value on Nike. Philip Morris. So, we closed above the 1 ATR channel. We did come into the value zone. We have not closed below the value zone. We went down. We finally stuck. Now we stuck. Now we stuck, right? And when I mean stuck, sideways movement. So this is what I would be looking for. If like Friday, we stabbed down below and then moved up and triggered a V1 or a V2. But this is what I'm looking for. Above the 1 ATR channel, wait for it to stop going down, have a couple days of sideways movement showing there's some stability, and then look for a V1, V2 entry. So I'll be watching this one in the future for sure. PayPal. So I was just talking about not taking higher lows unless it closes below the 1 ATR channel. And this is why I did not take this trade, unfortunately, because William, you see how this is a higher low V2, but do you see how we never closed below the 1 ATR channel? So because we didn't close below the 1 ATR channel, I can't take the higher low V2. And that's exactly what we got. Otherwise, I mean, if you guys remember, I was watching this, but I was like, it didn't close below. I can't take the higher low V1, V2, but you can see these V1s and V2s are oftentimes very, very good triggers. Bump, bump, bump. So anyway, now, since I missed that, I have to wait for a pullback into the value zone. Qs, same thing, double top with bearish divergence. We have a high here, and this leg here, you go with the readings of the highest bars. We pulled back with some red MACD bars. Now we're higher than the previous high, but look at the MACD reading here, barely positive compared to here, so it's showing slowing momentum. Doesn't look like slowing momentum, does it? But it is based upon the MACD numbers. Silver, so I did buy the higher low V2 yesterday. Unfortunately, it went down against us. 1586 is my stop today. It's at 1585. So if it closes below 1586, I will have to go ahead and just take that small loss. S&P, of course, we had the nice gap up after buying it at yesterday's open. We'll be buying that again. Bonds. Nothing here today, but just a good example of the third ATR channel or third Keltner channel. Did find support at the third ATR channel. Looks like it's finding resistance at the positive third ATR channel. 90% of prices do tend to find support at the negative third ATR channel. 90% of prices do find resistance at the third ATR channel. So if I'm in a stock, I'm definitely not going to be buying up in this range. I would rather be buying down here at the negative third ATR channel. If I buy down here, I'm going to be looking to sell it up here. Tesla, okay, good example. Above the value zone, retail, people wanted to buy high retail prices. At the very least, let's wait for this to come back into value. We came back into value. We did hold. This didn't really hold. This did hold. So I would be looking for a V1, V2. It would be an excellent place to buy a dip here in the value zone with a couple days of sideways movement. Actually, I like one more day of sideways movement and then a V1 or a V2. But just a good example of when things get overpriced here, they always, most of the time, I guess I shouldn't use the word always, but most of the time they will come back. They will revert to the mean. Basically, coming back into the value zone means reverting to the mean. So possibility on Tesla in the coming days. Twitter, of course, we bought this with the higher low V2 here. This has been really nice. Did hit one profit target. Did not hit the 50 RSI yet, so looks like I will be keeping this, but this has been a fantastic trade so far. UNH, way overextended. Looking for a pullback into value. Oil, above the 200-day moving average, but too high in the channel. VIX down again today. This has been the most unbelievable downtrend on VIX I have ever seen. Look at this. This is unbelievable. Closed under the third ATR channel. Anything that closes under the negative 30 ATR channel is very, very weak. Ideally, be smarter to wait for a close back over the third ATR channel if you're looking at VIX. Verizon, I think Mount Doji asked me about that yesterday. With the V2, technically a V1, looks like a V2, but technically a V1 also. MACD went positive here today. That's good. Walmart, just moving sideways. I would really be looking for a nice V1 or V2. That would be sweet. How are we doing on time here? Energy, nothing there. Financials, need to pull back into value. Real estate. This would have been a nice higher low V2 here if it would have happened, but it did not trigger. Utilities up a little bit today. If I could get another V1, V2, I would take it here, and healthcare. So with that being said, I don't see anything today whatsoever. So we have 5 minutes left. It looks like Amazon is going to close over. So I'll tell you what. Let me take care of this here. Okay. That's taken care of. So Amazon's fine. I'm going to hold this until we close back below the 200. Home Depot. Nice. Wait a minute. Okay. Right. For some reason, I thought we hit 3 profit targets. Look how close we got to that profit target, the third one, but we did hit 2. Home Depot had the 1 profit target. Now that it's moved up nicely, I'll be waiting for possibly a rejection of the 100-day moving average or close back below the previous day's low. Looks like I am going to have to get rid of silver. SPY, we're going to be buying that at the close again today. Twitter, 1 profit target here, looks great, and McDonald's looks great as well. So let me Qualcomm. I really don't see anything here on Qualcomm, a man solo. I mean, there's not a V1, not a V2, not really low enough. Yeah, I don't see anything there, so I will... Oh, EXC. I like EXC. We have a double bottom with a bullish divergence. We have a V2. I like it. I definitely like that trade. Here's the low, rally, low, deep MACD bars, green bars, no red bars, which is good, and you have a trigger. You have a V1, V2 trigger. If it were me, I would put my stop here. All right, 1 minute. Silver. Looks like I'm going to have to sell silver here. Okay. Looks like everything's taken care of. And where did we get filled on the SPY? 315.48. Wow. Wow, wow, wow. All right. The charts are getting up to my indicators. Pretty soon they'll be hidden. All right. So that's the new entry on SPY, 315.48. Did hit a all-time profit, all-time high on this approach using the overnight SPY trade. And I did hit a yearly high in my trading account today, which is pretty awesome. So I'm always grateful when that happens. That's always a big thing for me. So and hope you guys are doing well as well. And silver, so silver did close under halfway the washout. I did have to take a loss on that. But 1, 2, 3, 4, 5, 6. We were 5 out of 6 today. Not bad. Let me see here. 18, 18. Okay. All right. I did take care of that for you, Bruce. Amazon. Okay. So listen, I'm going to go through the rest of the comments and the questions. If you have any more questions, please let me know. Before I do that, just want to put in my quick daily plug, let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I offer a course. It's 5 sessions, 2 to 3 hours per session, usually more like 3 hours. But I teach you everything I've learned over the last 24 years as a trader, everything that I've learned from all my mentors and coaches. And I think it's a really good course. I mean, you know, all the people who have taken it seem to have really enjoyed it, really glad they invested the money. It is $1,000, but I think it's really an investment in your trading career. And I think most of the people that have ever taken my course thought that it was a good investment and good value for what they got. But I teach you everything I've learned. Each session I teach you first. I have you teach it back to me. We do lots of chart analysis. I have you break down the charts to me. What's good here? What's bad here? What are the pros? What are the cons? What's the risk to reward ratio? You know, we talk about psychology. We talk about position sizes. We talk about correlations. We talk about different entry approaches like deep dip buys, higher lows, return to values, crossovers, all the things we talk about here, but just in more depth. So, you know, if you're interested in taking the course, I really honestly do think you'll be really glad that you did. It's pretty intense. It's not like you just sit back and listen. It's very interactive. I teach, you teach it back to me, so forth and so on. So if it's of interest to you, reach out to me. It generally starts with about a 30-40 minute Skype call. If you're interested in the course, you can take the Skype call. You don't have to take the course, but I just like to do a little interview. I like to speak to you, talk to you about your trading, how you got into your trading, what your challenges have been, what your goals are, and then that lets me put together a lesson plan to help you achieve those goals. So, if you're interested in having that free 40 minute Skype call with me, please let me know. And there's no pressure on the call. I can promise you that. I just genuinely want to see if we're a good fit for each other. But my email's in the description of this video, or you can reach out to me on Twitter. And this is a good time to do it. This is a good time to do it before the end of the year to get you all ready for next year, right? And then if you like this channel and you haven't subscribed, I would really appreciate it if you would subscribe and maybe, share it with other people, talk to other people, maybe have them subscribe and, help me grow the channel. And then if you could, I would really appreciate it if you'd hit the thumbs up button. It helps grow the channel, helps YouTube know that it's, a channel that has some value, that people think it's valuable, and that there's interaction and so forth. There's a lot of people out there that need help with trading, guys. Lots of people. And I think if we could get them to this channel, it would help them. Definitely would help them. So if you could hit the thumbs up button before you leave today, that would be awesome. So, all right, let me go through here. All right. All right, so DN we talked about. I can have more than 6 trades. I just can't have more than 60%. We said hi to Mount Doji. We said hi to Bing He. We said hi to Andrea. And then William, we looked at that on the HP chart. VTR looking a little anemic today for Jesse. Yeah, I had this up here. Yeah, it is anemic compared to yesterday's big move, but there's no chart damage done to this chart. You have this big bar, which is very strong. Just a little profit taking on lower volume here, Jesse. You know, but you know what the trade plan is. But I know it's frustrating when you have a position and you have the market go up, but the market doesn't go up. Your position doesn't go up. It's always kind of a double bummer, right? But nothing wrong with this chart here. Did test the 10-day, close back above it, so that's good. But you know, you look at VTR here, lots of days under the 10-day moving average. Now it closed back above, like Beyond Meat, right? Lots of days under the 10-day. Finally, yesterday closed above the 10-day average. At the same time, you had the under 30 over 30. William says, I had the same thoughts. Thanks for confirming the previous low will need to be washed out before to make it valid. Yeah, that's a tricky one. But if you make a lower high, you have to wash out that first low to take the next trade, at least the way that I approach it. Dr. Jorgensen says, snow shoveling instead of hike. Back to Utah on Friday. See you then. Oh, you're coming back Friday. Great. I will see you Friday, bud. Murat, hey, buddy, what's going on? Good to see you. Is it still snowing in Norway? Any trades for us, Murat? Any interesting trades? Mount Doji says, check out TRP. Okay. Oh, whoa. See, this closed under the 1 ATR channel, came back up, did not have a V2. This is fine. This is totally fine. This is a higher low V2, higher low V1 sideways movement, washed out, closed back above day one's close, washed it out nicely, closed above the moving averages, closed above or the 20 and the 10 and the 5, and MACD is positive and above 50 RSI. I like it. You know, it doesn't mean it's going to go up, but it makes a very easy trade. I mean, I would use halfway the washout bar, Mount Doji. A close below halfway the washout bar is my stop if I'm wrong. Or if you're right, you know, target the 70 RSI up here. So it's a great risk to reward ratio. That's all you can get out of something. You don't know what it's going to do, but you do know that it's from a technical support level. You have a fairly small stop here, or stop if you're wrong, and you have good upside potential if you're right, right? So it's asymmetrical risk, more reward potential than risk. And the V1, even though we don't know what it's going to do, we do know that today it already went down here. The market tested this price underneath this low, didn't like it, went right back up. So that's excellent information to have, right? Doesn't mean it can't go back down, but it just told you today that it doesn't like it down there. So, you know, in my opinion, it gives you a little bit of an edge for the future because the market didn't like it down here, and it just told you that. Yeah, I do like EXC. So here we have a low, right? We had this big down move, deep MACD bars. Boom. We had a rally, which Dr. Alexander calls breaking the back of the bear. Now we are lower actually than this previous low, but you see, even though we're lower, we don't even have any green bars to the downside. Even a little red bars to the downside, as long as they're less than half this distance of these bars, would be valid, but this is even better. This is called the double bottom with the missing right shoulder. See, there's no red, there's no right shoulder. And then, so having a double bottom with the bullish divergence is a good thing, but it doesn't mean you go ahead and you just buy. You then have to have a trigger. Well, here's the trigger. V2, day 1, day 2, day 3, day 2, washes out day 1, day 3, closes above day 1. What I really like about it, see how day 2 washed out the negative 1 ATR channel and closed back in the value zone? I like this. 100% I like this trade. Did you take that trade, Evan? Frank says, it's conflicting when you have a Home Depot chart climbs, but fundamentally you feel Lowe's is a better company with an overall better chart. I haven't looked at Lowe's for a while. Yeah, Lowe's is definitely much stronger. Its earnings seem to have been better. But, you know, I know that's human nature, Frank. But if you have a signal, even though you don't like the company, I take the signal, right? And listen, this was a deep dip buy here on Home Depot, obviously, right? Under 30, over 30, V1. I mean, obviously it's worked out well, but am I expecting it to go back up here? No way. At the first time of trouble, I'm out of here. I'm not marrying this stock. I'm not even dating this stock. I'm speed dating this stock, right? But that's why lower lows tend to fail quickly, because people are just looking for that dead cat bounce. But as long as it keeps moving up, I'll stick with it. If we would have rejected the 100-day today, I most likely would have taken profits on this. But going forward, if we reject the 100-day, I'll take profits. Or if we close back below, I'll also take profits, because it's moved, you know, significantly more than 1 ATR away from my entry. Being he took Jack for mean reversion setup, was looking for PRSP but no V1 or V2 entry, only sideways movement. Have to tell myself to let go of PRSP. Oh. Have to tell myself to let go of PRSP, though I wanted to take it. I am following the rules. Well, good. I am glad to hear that, being he. Let's look at Jack. Okay, it's fine. Went under 30, over 30. You know, obviously I'd liked it better if it was a V1 or a V2, but it didn't happen. But I do like that a couple days ago we rejected the third ATR channel. Remember, 90% of prices tend to hold at the negative third ATR channel. So I like to buy things that are close to the negative third ATR channel. So this is good. This is good. Under 30, back over 30. Was looking at PRSP. Let's see. PRSP. I don't think I have that one. PRSP. No, I don't have that symbol. Maybe you could check being he, make sure that's the correct symbol. And then a man solo. Of course, we talked about that already. I just don't really see anything on Qualcomm yet. We closed below the 1 ATR channel, meaning I need to move back into the value zone. Couple days down, look for a higher low V1, V2. To the downside, you know, maybe a V1, V2 off the 50 might be interesting. Take a look down at the third ATR channel might be interesting if you have a low RSI, but nothing jumps out at me on Qualcomm. Hey, William Green. Good to see you. William says VIX goes opposite SPY, correct? Yes, generally. So long as SPY and market in general goes up, VIX will continue to go down, correct? In theory, sometimes there's divergences where the market will go up and the VIX will stay the same or go up. I mean, if you look at the VIX today, right? Here's the index for the VIX. Even though the market was up today, the VIX was up today. So it's not always, but generally, yes. You know, As the market goes up, the VIX will generally go down, because as the market goes up, there's not as much fear, and if there's not as much fear, the VIX goes down. When the market goes down, fear goes up. When fear goes up, VIX goes up. But this is interesting here today, actually. It's interesting that the market did go up today, and the VIX also went up today. So, the way I view that is possibly people that are trading the VIX are thinking possibly we're getting close to a top. Jackson said SLV is meandering around the halfway bar. Yep, had to get rid of that one. Mount Doji, I'm sorry, I was on the phone. What did you say about TRP? Let's see. Yeah, I like TRP. We closed under the 1 ATR channel. We came in. We've made a higher low compared to this low here. Sideways movement. Nice V1 over 50 RSI, over the 5, the 10, and the 5. Has the 50-day moving average up here to contend with. But yes, I like this. I like the sideways movement. I like the V1. I like that MACD's positive. I like that it's a higher low compared to this previous low. All good. I like it. And it gives you a very good, well-defined loss. I mean, the way I trade, if here's the washout bar. If we close below halfway of this washout bar, I would just go ahead and get out. Bing He says, I was about to short Netflix on market open. Somehow I had a feeling it wouldn't work out since market is strong recently. I canceled the order before market open. Is this considered luck? Well, let me take a look at the chart and I'll tell you if it was luck. Yeah, it was luck. I mean, I'm glad you didn't short it. I mean, shorting's a tricky deal, Bing He. It's a tricky deal, and like you said, the market is very, very strong. There's, I wouldn't want to be thinking about shorting Netflix unless I had a double top with a bearish divergence, or at the very least, some kind of negative reaction around the third ATR channel. So me personally, I would not, there's nothing up here that tells me to short. Very strong move up with the momentum. We have a high, we have a higher high. You can see this higher high has higher momentum than this. So it's not a divergence, it's a convergence. I would be very careful in taking shorts here unless you have a lot of real signals that tell you that. Okay, you did take Exelon. Good. Well, I'm going to watch that one for you. What did I do? All right. So you're on record now, Evan. I don't know exactly where you bought it, but I imagine it's somewhere around there for Evan. I do like it. Let's look at the weekly. Yeah, the weekly's been holding support here too, so I like it. Double bottom, bullish divergence, missing right shoulder, which is even better. V2. Do we think it's going to go up? I don't know. You don't know, but it does make sense from a technical perspective, from a double bottom support perspective, from a slowing of momentum perspective, and from yesterday a rejection of the previous day's low and today closing above that low. So all you can do, make an educated guess based upon the support resistance, take your trade, position size correctly, 10% if it were me, if it's me, and getting out quickly if you're wrong, and being patient with it to the right. That's what it is to trading, right? That's the key. But if you get in there and monkey around with it, that can be kind of a rocky road. So we'll be watching that, Evan. Bing He, yes, symbol PRSP. PRSP. Yeah, I don't have it. PRSP. PRSP. Yeah, I don't have it, Bing He. I put in PRSP and it's pulling up Permarock Royalty Trust, so dang it. Wish I could look at that one for you, bud. Sorry. Murray, maybe there was too much short float and they didn't want to carry that much into Thanksgiving. Tomorrow, Asia and Europe are open, so a large move can create damage while people are on vacation. That is a very good point, Murray. Very good point. To catch a lot of people by surprise, right? And the markets are open tomorrow in Asia and Europe. So, and then of course Friday we have a half a day, right? And a lot of traders take it off. So you know there can be a lot more volatility because there's not as much liquidity. By the way, I will be here on Friday. The market closes at 1 o'clock Eastern instead of 3 o'clock Eastern. So I will be here Mountain Time from 10 to 11. So remember, it's 2 hours earlier. No, 11, 12, 1. Yeah, so normally I go at 1 to 2 Mountain Standard. It's going to be from 10 to 11 because it closes at 11 Mountain Standard Time. So I will be on at 10 o'clock, closing at 11 o'clock. Oh man, I have to do this at 10 in the morning? I don't know. I'm going to have like 3 cups of coffee. But remember that. Friday closes 2 hours earlier, right? So instead of 1 p.m. Mountain Standard Time, it's going to be 10 p.m. Mountain Standard Time. Gamer Squad. Hey, are you getting that snow in Denver like we are in Utah? Maybe it hasn't moved over there. Gamer Squad says, hi Greg, can you look at NXPI? NXPI. Okay, so here's another example, guys. We closed above the 1 ATR channel. We came in. We did have a V2 here that did bounce, but no sideways movement. And this is what happens very often when you're above the 1 ATR, you come down and you just bounce. You don't have sideways movement. You just come down and you bounce. A lot of times those were, excuse me, those will turn into lower highs. See how this high is lower than this high? So now, in order for me to get interested, I have to wait for the price to come back, wash this out. You might ask, why would you do that? Because people that bought this pivot point here, a lot of people have stops down here. They're going to hold it as long as it stays above here. But the market has a weird way of like a magnet wanting to come back down and test these stops now. So lower high, have to wait for this to wash out. But this is a great example. More times than not, if you're above the 1 ATR channel, you nosedive in there and then nosedive out of it, creating a V. Very often that V type of formation fails. Better to come down in, sideways, 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 then one stab down and reverse back up. So I really don't. Yes, it is a higher low V2. Here's day 1, here's day 2, here's day 3. Day 2 does wash out day 1. Looks like today did close above day 1's close. But for one, this day 1 bar is larger than 1 ATR, so I don't really like that. But I really don't like it because now we have a lower high compared to that previous high. Hope that makes sense. Bing He said, yesterday Netflix rejected the 70. Did it? Oops. Oops. Are you sure? Okay, I'll take your word for it. Yeah, so listen, if I was in this trade, I would get out. But there's a difference between getting out of something when you're long compared to initiating a short trade, right? Like I took the 520 cross on Netflix here, was a good trade. Scaled out, scaled out, scaled out. I got out here when we rejected the previous high, and we had a kangaroo tail. Obviously, wish I would have stayed in this, would have paid off, but I went on to other trades. But if you had the rejection of the 70 at the same time you had the rejection of the third ATR channel, and like maybe you had a V1 to the downside and you had a double top with the bearish divergence, under 70, under 70, yeah, sure, take the profit and take your long position off, but it's not enough for me to want to short the trade. But looks like it's good that you didn't short it anyway, Bing-Hee, anyway, right? Frank says QRVO. QRVO. So, yeah, really doing well, obviously, right? We're at 75 RSI. But look, here we have this move up, very strong MACD bars. We pull back down, we go red. Today we went higher, we broke out, but look, there's no green bars to be found. This is what Dr. Alexander Elder would consider a double top with a bearish divergence, even worse than that, missing right shoulder. We are higher. We should at least have some higher green bars. We have no green bars. He would consider this extra bearish. So, I mean, interesting, being in 5G and all that. But, I certainly wouldn't buy it here, and I wouldn't short it here either. We have a double top with the bearish divergence, but we don't really have a signal to go short. Evan says, great to hear you'll be on Friday. Oh, well, I'm glad to hear that. I was wondering whether I should be. But remember, guys, it's 3 hours earlier than normal. Let's make it simple. I know people are around the world, different time zones, but 3 hours normal. So Friday be on at 10 o'clock, hopefully with both eyes open and awake. I may have to have you guys carry most of the podcast. I am not a morning person. So anyway, but yes, I will be on. William Green, been watching for a couple weeks. You're helping my trading. Happy Thanksgiving and see Friday. Oh, great, William. I'm really glad to hear that. Music to my ears. That's what makes it worth it. If I'm doing this channel, when I have people that say, it's really helping them. So I'm really glad to hear that. Jesse said, hunting out the stops. Yeah, that's right. On that lower high that we just talked about. So Jesse, you only have VTR. Is that correct? I think you only have VTR. Evan says, yeah, I will have to set an alarm for Friday. Where are you from, Evan? Yeah, so hit a yearly high today. Very thankful for that. Very, very thankful. It is Thanksgiving, so that is what I'm thankful for. And, Evan lives in LA. I'm originally from LA. Sounds like Evan is not a morning person either. Jesse says correct. Okay. I do want to kind of, before we leave today, just mention that, there's a lot of FOMO in this market, right? We're very high. A lot of the stocks are extended. Doesn't mean we cannot go higher, right? I'm not saying that, but from a risk to reward ratio, there's very few setups that I see here. And, don't let yourself be carried away with the momentum, and the news, all the news headlines about being, new highs and all this kind of stuff. Yes, sure, it can continue to go up, but if you don't have a lot of positions right now, be okay with it. Just be patient, wait for the pullback. We've had a huge move up. Once some selling starts happening, once we start taking out previous day's lows, once we start losing moving averages, there's going to be a rush to the exit for people to go ahead and lock in their profits. And, Steve Burns says buying begets buying, selling begets selling. And so, the momentum, the pendulum can swing. So be careful out there, right? All right, so I'm going to start saying goodbye to everybody. If you have any other questions, please let me know. Jesse, good to see you, sir. Appreciate your service and what you do for your job, and be careful, and hope you and your family have a great Thanksgiving. Evan, thanks for coming by from Los Angeles, and hope you have a good Thanksgiving. Jackson, no Thanksgiving for you, buddy, because you're in Australia. I'm kidding. I'm kidding. Oh yeah, it's going to be 3 hours earlier for you on Friday. Yep. So, but anyway, thanks for coming by. Appreciate it. Hope you're doing well. Do you have any positions, by the way, Jax? Binky, good seeing you, my friend. Be careful on those. Be careful on those shorts. Make sure there's really something there. Man Solo, I am thankful for your live chats, Greg. These are very therapeutic. Your positivity is contagious. Oh, thank you, Man Solo. I appreciate that. Hope you have a nice Thanksgiving. And Jackson, I hope you do have a nice Thanksgiving down there as well. You're part of the group, so you get happy Thanksgivings, right? William Green, really glad to hear that's helping you. Thanks for coming by. Good, happy Thanksgiving to you. Hope you have a good day tomorrow. Frank, thank you for coming by. Appreciate it. Hope you have a good Thanksgiving tomorrow. Gamer Squad, thanks, buddy. Appreciate you coming by. Good seeing you. Happy Thanksgiving. Murat, you have happy Thanksgiving in Norway, even though you don't celebrate it over there, but hope you have a great day tomorrow, and hope you have a good rest of your evening. Mount Doji, good to see you, sir. Hope you have a good Thanksgiving down there in Texas. Hope you have a good day. Thanks for coming back. Let's see here. All right. Hope that made sense, William Green on the VIX. And Dr. Jorgensen, hope you have a good day, bud. I will talk to you later, and look forward to seeing you on Friday. And then our other William from Hawaii, hope you have a good Thanksgiving over there, buddy. Enjoy the sunshine. Andrea, nice to see you, ma'am. And thanks for coming back, and hope you have a really good Thanksgiving. And DM, I think this was the first time you were here, DN. So anyway, hope that made sense on position size. I'm glad you asked those questions. Position size is hugely important. I don't think we talk enough about it. Christopher Hitchin, good to see you, sir. Hope you have a good day over there in the UK, and hope you have a good Thanksgiving, even though you don't celebrate, but you're part of our group, so we'll pretend, right? But have a great day, and let's see. Steve Burns. Good to see you. Thanks for coming by. Awesome trades on Beyond Meat and Etsy and Amazon. Congratulations, my friend. I wouldn't be surprised if you made a yearly high today as well. But hope you and Holly and the dogs have a good Thanksgiving. And I am definitely, one of the things, if people ask me what are you thankful for, I'm thankful for Steve Burns. I'm thankful for everything I've learned from him, for being a coach and a mentor to me over the years. And Marco, good to see you, sir. Thanks for the happy Thanksgiving. I don't know if you celebrate Thanksgiving over there in Pennsylvania, but anyway, hope you have a wonderful day as well. JT, good to see you. Always nice to have you here. And I think I got everybody. Let's see. Frank says, never forget, cash is a position. That's true. When I studied with Dr. Elder, he said, Greg, 3 positions, long, short, and cash, and they're all valid positions. There's a time and place for all of them. Evan, time to do my profit phase out math. My favorite part of the day. Take care. Yeah, those little profit targets are my favorite as well. So, all right, everybody, I'm going to go and shovel snow for the rest of the day. There's so much out there. I looked how much there was. I was like, my gosh. So anyway, here we go. But have a good day tomorrow. Go out and do something nice. We need more of that in this world, right? And again, I will be here Friday, 3 hours earlier than I normally am, if you would like to attend on Friday. Jackson says, workout, Greg. Shovel snow. Yep, I'll definitely have a workout. All right, everybody. Thanks a lot. Happy Thanksgiving. Have a good time, and see you Friday, hopefully 3 hours earlier than normal. Take care now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.